What is happening, everyone, and welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today is Monday, October 13th, 2025, and we are breaking down the NZDUSD currency pair, also known as the Kiwi. There's a fascinating battle playing out between fundamental drivers and technical levels, so we'll start with the latest news before diving deep into the charts. First, the big story impacting the US dollar is the ongoing government shutdown. This is creating uncertainty and undermining the greenback's recent strength, as it delays the release of crucial economic data like jobless claims and NFP reports. On the other side of the pair, we have the New Zealand dollar, which is under pressure from its own central bank. The Reserve Bank of New Zealand, or RBNZ, is expected to cut its official cash rate, with some analysts even predicting a more aggressive 50 basis point cut due to a recent contraction in GDP. This creates a fundamental tug-of-war, a dovish RBNZ weighing down the Kiwi versus a politically hampered US dollar. Market pricing currently indicates a 55% probability of a 50 basis point cut from the RBNZ, which is a significant move. Meanwhile, the dollar's repricing trade, which was based on strong US data, has completely stalled. Traders are now keenly awaiting new catalysts, such as the upcoming RBNZ decision and a speech from Fed Chair Powell, to find a clear direction. Now, let's pull up the daily chart to see how this fundamental conflict is translating into price action. Looking at the bigger picture, the Kiwi has been in a significant downtrend since late September, where it failed to hold above the 0.6350 level. We can see a series of strong bearish candles throughout early October, indicating sellers have been firmly in control. The volume on these down days was also significant, confirming the seller's commitment. This aggressive sell-off seems to have found a temporary floor around the 0.5730 level in recent days, which notably was the lowest level since April according to one report. This area is acting as a critical initial support zone, which is where the market has begun to consolidate. The peak near 0.6350 now stands as major long-term resistance, while the area around 0.5850, which was highlighted in the news reports as a key resistance zone, is the more immediate major resistance to watch. A failure to reclaim 0.5850 would keep the bearish structure intact. The sharp drops on October 4th and 7th, for example, directly correlate with the increasing bets of an aggressive RBNZ rate cut. Let's zoom in on this recent price action from mid-September to get a better look at this downtrend. Here we can clearly see the rejection at the highs, followed by a break of several support structures on the way down. The momentum was incredibly bearish, with very little in the way of bullish pullbacks. However, pay close attention to the last 3 to 4 trading sessions on this chart. The size of the daily candles has shrunk dramatically, and the price is moving sideways, not down. This pause in the downtrend coincides perfectly with the news of the US government shutdown intensifying, which has given NZD bulls a reason to pause the selling pressure. This indecision shows that neither buyers nor sellers have conviction at these current levels, creating a classic consolidation pattern. To get a feel for the current battlefield, let's drill down to the 15-minute time frame from last week. Here we can see the market being tightly range-bound, oscillating primarily between the 0.5730 support and the 0.5800 resistance. This is a scalper's dream, but a swing trader's nightmare, as there is no clear trend on this micro-level. Let's be more specific with the levels. Notice the multiple rejections from the 0.5800 to 0.5806 area, showing that sellers are active every time the price tries to push higher. Conversely, buyers have consistently stepped in to defend the 0.5730 to 0.5750 zone, creating a clear demand area. This price action is the very definition of market consolidation and equilibrium ahead of a major news event. A breakout trader would be waiting for a decisive close above 0.5806 to signal a potential short-term rally, or a firm break below 0.5730 to indicate a continuation of the broader daily downtrend. The volatility seen around the start of the London and New York sessions is also apparent, highlighting the best times for short-term opportunities. Alright, Let's pull back to the daily chart for a final summary and to outline what to look for. The key takeaway is the conflict between a weak Kiwi due to a dovish RBNZ and a potentially weakening US dollar from political turmoil. This makes the upcoming news catalysts absolutely critical for the next directional move. Let's clearly define the price levels to watch. Immediate resistance is at 0.5800, followed by the much stronger zone at 0.5850, where sellers are expected to step in aggressively. A break above 0.5850 would be a significant bullish development, potentially signaling a short-term trend reversal. To the downside, immediate support is the 0.5730 area, which has held up multiple times last week. A failure to hold this level could see the price quickly test the psychological 0.5700 mark. Below that, there isn't much support until the 0.5600 area. Now for some potential scenarios. The bullish case, which I'd assign a 40% probability, requires a break and close above 0.5850. This would likely be triggered by a less dovish than expected RBNZ statement or escalating US political issues that hammer the dollar. Confirmation would be seeing the hourly chart make a higher high above that level with strong volume. In this scenario, the first target would be the 0.5950 trendline resistance. The bearish case, which seems more probable at 60% given the overarching downtrend, would be confirmed by a daily close below 0.5700. This could happen if the RBNZ is overly dovish or if the US government shutdown is resolved unexpectedly quickly. Watch for increased selling volume as price approaches that 0.5730 support for an early warning. If that support breaks, we could see a move down to 0.5650 and possibly lower. In the very short term, I expect more choppy, range-bound action between 0.5730 and 0.5800 until one of these key levels breaks. The main thing to watch for this week is the RBNZ policy announcement and any headlines coming out of Washington. These events have the power to break the current deadlock. That's our complete breakdown of NZDUSD for October 13th, 2025, here on Explain the Charts. If you got value from this analysis, please show your support by hitting that like button and subscribing for more content. And of course, please remember that this video is for informational and educational purposes only and does not constitute financial advice. Trading Forex involves a high level of risk, and it's crucial to conduct your own thorough research and analysis before making any trading decisions. Thanks for watching and trade safe.